Yo, yo, yo. Welcome back to the channel. Hey, hope you had a good day. It's late night Dave again. And I don't drink every night, but I figured like it was kind of a meme, so I got a little tequila on the rocks. Delicious. All right, let's get into the chart. Let's talk about what occurred today. And let's talk about our outlook because I'm not gonna lie, there's a little controversy going on over on Twitter, over in the Twitter world, where a lot of people are on board with me, agree that this is going to be a bearish breakdown tomorrow, and we are going to go into this green target area that I have highlighted right here, which most of you guys are going to be trading SPY, I'd imagine. So it's going to be in the 380 to 385 range is what I'm seeing on SPY tomorrow. But on futures, 3820 to 3860-ish range is what I'm seeing. So what I want to do is I want to explain the logic from a step-by-step basis. And then also I want to undo it, and then I'm going to try and make a bull case. Okay, so I'm going to try and challenge my thoughts, my belief about what this chart is saying to me right now. Over the course of the past week, what we've been calling for is a big move down. We've been calling for this 380 to 385 range on SPY at least all week this week, and probably a little bit into last week if you've been following on Twitter. So make sure you do that. Twitter's down in the description below. And yeah, so let's get into it. So, and we're going to use futures just because the amount of price data is more useful on futures just because there's more price data. So it can give us more information on what's kind of leading up to the next move, right? The first thing that I want to point out is this is the uptrend that we've been following, right? We would draw it like this. So we can make that a little bolder and green. And then this is the previous downtrend that futures and SPY recently broke out of with the bullish CPI report. And since that bullish CPI report, we've kind of hung in the balance here, right? And to me, this looks like a distributive move. And what I've noticed is that when you have a correlation or an apex that occurs between big trend lines, very meaningful trend lines, and you can correlate that with like if you can connect it to the type of price action that would be connected to a bullish or bearish move out of a trading range, these tend to act as magnets, right? So do I have like a little magnet, a little bitty, is there like a little maggot emoji? Magnet, not maggot. Magnet, not a magnet. All right, we're gonna put a lightning bolt. All right, where's that lightning bolt at? Where's it at? Oh, do I just click it? Poof. All right, so that lightning bolt is your magnet, okay? I've never used that tool before. All right, and then to go along with that, we also know, if you've been following the channel, that the 707 Fibonacci has been the most consistent level that is predicted tops and bottoms, especially recently, and no matter the range, right? So this big drawdown here, if you pull the Fibonacci here, you can see that the next top was the 707 there. And there are plenty of examples, like I'd imagine this might be a 707 here or something. Oh, actually this one was a 786, but whatever. Look, trust me, bro, you can go back on the chart, figure it out yourself, okay? Logarithmic 707, okay? So now what you have is three really, meaningful ways to suggest that you should be coming to this range of price, right? You should be coming to this range of price on this timeline. That's the fundamental basis for the logic that we have, okay? I mean, and it's really not that complicated. You know, now you do have this downtrend, I suppose, but this doesn't really matter in the grand scheme of things. And we can get down to a more granular level and take a look at the chart. And let's look at the price action. So going into today, we were calling for a move down to 390 or so before a bounce. And literally, obviously, we opened at 390, SPY. You had this accumulative range play out here, right, where you're hanging relatively low. And then you popped up here, and you retraced. You retraced this move, right? So now what has happened is you've had a perfect retracement of this 707, right? Simple as that. I mean, it's undeniable that this is a 707 retracement at this stage, right? And also, this local range here, in my opinion, appears relatively distributive as well, right? So you had this first distribution. Obviously, this one played out, right? You broke down here. You bounced up. And now what I think that you had here is like a UTAD move, and now you're in your last points of supply, and you're going to be working your way down, okay? Relatively aggressively. You know, overnight, when you know, America isn't really paying attention, I do believe that you're going to start stair-stepping your way down here. We also have this local downtrend with multiple touch points. Now, let's see. How did I have this drawn before? It literally was perfect earlier when I drew it. I shouldn't have deleted everything on my chart, I guess. Okay. I'm not 100% sure what's going on there, if it's a timeline thing, whatever. I guess I could pull up my phone and look at the phone chart, try and figure it out. But you get the idea. Obviously, you're in a downtrend, right? So I do think that really soon here, actually, you're gonna start turning down. I mean, you might come up, test the downtrend again, whatever, but you are gonna be working your way down, stair-stepping your way down in this manner towards here. And I don't know what kind of news is gonna come out or whatever, but I do believe that this is when, you know, you're gonna, like, late in the day tomorrow, you're gonna be right around this range. And me personally, I might be out of my position by then. I might not be holding anymore just because I'm happy with the amount of profits that I've had. Because we have had puts in this major rundown for the Poland missile thing or whatever. We were holding puts here. And we were holding puts in this big move here going into this morning. And so I've kind of just, like I said on Twitter, I averaged back. You know, my plan was I closed because it was already at 390. I knew that the volatility payout was going to be too good. So I got out. We were calling for like 394-ish on Twitter, saying that we could have a bounce up there whenever we saw this accumulative range start to play out. That's what we got. And then you even got a little higher in after hours here. But regardless, overall, my expectation remains the same. So now let's talk about a bullish case, right? Let's try and dissect this. Let's be bullish about the chart. Let's take our bias away. And also, I do want to say this as well. Just quickly, if you do break through here and you head straight up and you start to make new highs, I think that it is very unlikely, okay? Very unlikely at that stage that then you would be able to break through the macro downtrend, okay? And I don't really care whether or not that's what occurs or not. I don't have a dog in that fight, but I will say that it is relatively unlikely. If instead, just because you're coming out of this distributive looking range, and this would then turn into an even more distributive range, and that would mean that you're going to have probably a really nasty, and some of you guys might like that, but a really nasty move to the downside in this way, in my opinion. Obviously, you would have to see what happens at this support level and probably another support level or whatever, but that would be pretty much what I would expect. I mean, that would be like, you know, some sort of like the news would be like they're raising interest rates, 100 BPS, whatever. Don't really care about fundamentals too much. The chart usually leads us to somehow missile strikes in like the UK saying that they are officially in a recession for the first time or something like that. It just kind of times itself that way. So anyway, all right, let's do the bullish thing. Let's see. So if I were to be a bull in this scenario, my first thing that I would say, the first thing that I'm uneasy about as a bear is that this little range right here, right? This little range right here does appear relatively accumulative now, right? You're hanging relatively low within this range. You popped up here, you distributed out, but then you were really low here as well. And now you look like you're kind of curling a little bit. That could be a thing, and I'm not trying to be biased here. This last part here isn't really the best in my opinion, just because it is more like a I guess we would draw this as a symmetrical triangle sort of move. So this is more like a 50-50 thing. Not really a bullish type of setup, but just like, more like like we could flag up or we could flag down. It just really depends on the direction of the break. So that would be the first thing. But yeah, I do think that this range does look relatively accumulative. My counter to that would be that you do have to be pretty careful because that's how this range looked as well, right? So like this range does have this like steep run down here, which was actually a sign of weakness. And then you had this run down here that carried you up here, and then you kind of had this double top that played out as a distribution, and you traded back down, right? So you can get rejected out, even though it might look like it's holding relatively low. The context of the chart is much more meaningful, right? So you have to be watching Fibonacci's whenever you're doing this. You can see here that you got rejected at the golden pocket. So at least that's how I do it. I don't know. Other people, they like to draw like long-term levels and stuff like that, which I'm not disagreeing with. I don't think that that's a bad methodology. I just think that fibs are a little bit quicker, and they're more like contextual, like they mean more in the shorter term context, in my opinion. All right, from a trend perspective, I really don't see how you can say that the likelihood is that you're going to just continue to move up off of this big green trend line here. I do think that the overwhelming likelihood, based on my experience, looking at these sorts of things, especially when you're holding underneath a previous level of support that's now acting as resistance in the manner that you are, is that you're going to be relatively drawn back to this trend line. And look, I could be wrong on the timing, maybe you come and test it here, but I do think that it's relatively unlikely that you never come back and touch this thing, and then you just break up to new highs again, and then you do this. And again, that would be a very unhealthy move, in my opinion, but certainly possible. I'm not saying it's impossible. Did I say impossible just now? I meant impossible. This is, if you have a trend line, it's only really this, but you have two major touches on it. So this would kind of be like at this stage, as a bear, I'm kind of looking like, okay, when we get here, right, like we're probably going to come down and test this. When we do, do we break through? And then that's going to kind of be the real signal, like, yeah, we're definitely about to go for a ride down here, right? I mean, you do have some nice taps here. Let's look on a lower time frame. Yeah, you definitely, boop, 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 right? Somebody was really establishing this trend for sure. And then this would be an even more localized bull trend here that you can be watching. And normally how this will play out, like if this is a distribution, it'll go like this, and then you'll drag down here. Normally, how you can correlate that timing, again, it's going to look like this. You draw from the top to the bottom, and then you find your relevant fib that's attached to that move, right? So you can see here that's a golden pocket. It's a pretty good bet. If you start to break this trend line here, and you break down here, that's a pretty good like short-term trade. You know, if you were to be paying attention, that happened during market hours. If you're not trading futures, that would be a good little move to play off of, right? And probably a move that I might be expecting here. Personally, that's just kind of my read on things, but maybe I'm biased. Let's see. Is there anything else that we can do to debunk? Or do we want to give our more macro view of the market and what we think will happen after if we do what we're expecting to do? And again, none of this is guaranteed, man. I mean, I could be 100% wrong, dude. I could. In my opinion, I am like 80 to 85% sure at this stage that we are going to play out the way that I'm expecting it to happen. Okay? I'm 80 to 85% sure. Take that for what it's worth. You've watched the videos. You've seen me be wrong. You've seen me be right. You can take that assessment, do with it what you will. Yeah, whatever that means to you. That's actually what's important here. So, obviously, you see your range bound here. This kind of key liquidity zone. Again, man, this to me looks ready for a markdown. I can't really and again, I could be biased, but I can't really see it. This is not an accumulation. Like, this is not, nothing is accumulative. Nothing is signaling accumulation to me about this at all. It's all rounded up. You sink down here, right? You start your markdown phase. So all that is like this, right? Boom. So then it starts to look accumulative. You pop up, and then you get rejected down. Now, this is a really big move here. We're talking about a much smaller move relative, right? But that's how you get tricked with this. Oh, it's accumulation. Yeah, cool. You get this big pop up, and then you get rejected down because you're still distributing out. And then you have a better accumulation play out here, right? And a really good accumulation played out down here, right? So that's it. So let's talk about now. I mean, again, so now I am actually on a more macro basis as it stands right now. If you break down out of here, right, you go down to the level that I'm expecting. You probably don't go left at any point because I've never really seen that happen in a chart, but let's just assume that you go down here, right? I am expecting that on shorter time frames, the type of move that you're going to see down here. Oops. Can I zoom in? No? Can I? No? Okay. No, I can't do this. Okay. Okay. And look, I will say personally, it does look unlikely. It does look, oh man, there's not a lot of time left, Dave. Like, but I'm pretty confident, dude. Like, I'm not usually this confident. Just put it that way. You break down here. What kind of move are we expecting down here, right? So you get down here. It'll probably be around open at market hours. Yeah, I mean, this could be like before we open. I don't know what event will happen, but I am expecting a sort of rounding out sort of move to occur from here, right? Throughout the next, what would this time frame be? I'm expecting you to kind of like curl up along this uptrend here and really cement it as support, because I do ultimately think that the likelihood at this stage is that you have a rally up to, you almost already did have a rally to your 707 here. Huh. Okay. Yeah. So I didn't realize that it was that close to that 707 in that way. But maybe this is a good little fake out opportunity. But man, I didn't realize that the CPI, because I haven't looked at the chart in this way in a while. I didn't realize that the CPI almost got you a 707 test. Wow. All right. So anyway, that's kind of like more bearish than I would probably have normally been. But yeah, I am still expecting this, generally speaking, that you're going to kind of ride this trend up. You'll have some resistance here. Boom, maybe you have a bull fake, and then you lollygag your way out here. And you're gonna end up hitting this apex here. So what is this date? Oops. Yeah, December, right around Christmas time. Yeah, I mean, I don't know. It could be like, is it Q4 earnings or something, or Q3 earnings that occur around that time? Something like that. And I mean, look, you're probably actually going to break this uptrend, looks like to me. So that look would actually be more like here, and then here probably, and then, oh, this actually doesn't look that good now, but we would probably find support down. We could find support down here. Oh man, because then you might actually be drawn to the midline at that stage. Ooh, I haven't really looked at the chart like this. I can't believe I'm like messing up like this. Like I haven't actually zoomed out in that fashion and like actually looked at this, the top of this move like that, because I've been so focused on this little distribution range that we've been in. It's been a lot of fun. The memes, you know, it's been a good time. But anyway, yeah, maybe even, oh, this actually looks kind of juicy. You break this downtrend, and then you actually get drawn to, let's see, maybe the more macro 707. Oh, no way, dude. Damn. All right, look, you really got to hold support here. You got to hold support here. Because if you don't hold support here, then what's going to happen is you're going to go to our old buddy, the midline. Down here at the 707 by December 1st, and we're already halfway through. November. So that is this could escalate kind of actually rapidly if you break here and then you break and you continue to break down. This does look like it could be an accumulative, a distributive range. You pop up, try and protect that, and then you distribute back down. You break this trend here. Oh man, that could be really bearish actually, because you're back below this downtrend at that stage. You really don't want that to happen. Wow, I was actually thinking that I was going to be bullish coming out of this, but I think that I'm actually going to be waiting. I'm gonna wait and see if you break this liquidity zone right here. Let me get some of these lines off, remove some of this stuff. I'm not willing to be a bull until you break back above 39.16 on ES futures. Once you kind of test this range out here tomorrow going into Monday. I mean, really tomorrow. It's gonna happen tomorrow, in my opinion. Not financial advice. Do whatever you want. Just like don't blame me. All right, I'm just a guy on YouTube. Because then, if that happens, oh man. Because if that happens, now this looks like it's going to look like it's going to distribute back down again. So, like, for bulls and for probably, like, the betterment of, like, humanity or, like, to keep more people alive or something like that, I guess. Because remember the Big Short meme or whatever? You probably want to hold. It really depends on how you react in this range. So, yeah, see how I have it drawn here? If you have this, like, tomorrow, I'm not like willing it into existence. I'm just really convicted, I guess. Like, I've just really looked at this a lot. I've looked at it from a lot of different angles. I can't really see it another way at this stage. But if you pop down hard like this, not left, you can't go left. Let me get a path. Okay, so if you pop down hard like this, and then your reaction is you bounce up hard like this, like this, like this, that's not good, okay? That's not what you want. You can see already it kind of has this bear flaggy thing. But what you really want to see, if you want to see a bullish reaction, what it's got to look like is more like it's kind of just hanging down here. Everybody's just waiting for the next like crash or whatever on Twitter, you know. That's how it's going to be a bullish move. So look for this sort of move for bulls, right? And then we're going to do one for bears. If you just pop back up like that, right? You just do this. That's not good. That's very bearish in my opinion. So then the next move would be, sorry, I kind of double clicked a little early there, would here. Okay. Okay. Yeah. So I guess you know what I learned today in this video is something that I probably already knew. Don't just assume. You know, play it range by range, baby. Yeah. You know, like this. And then this one was the other 707. Make sure you screenshot that if you're interested in kind of keeping a log on kind of my thoughts on that, because it might be easier than coming back to the video. Yeah, 707, pretty much there. So screenshot that. And that's pretty much the video. Ooh, scoot it over a little, you know, go for the apex, baby. That's pretty much the video. Hopefully you enjoyed. Hopefully you gained something from the video. I know I've been late night lately, but that's just how life is, you know. I haven't been prioritizing this, so I haven't been doing it in the early afternoon. Usually I'm running over to the gym or something like that around that time, or maybe we're running errands or something like that. But hopefully you enjoyed. If you don't already, follow me on Twitter. I have a free Discord. It's a great community over there. A lot of guys that are sharing a lot of charts. I don't spend a lot of time there personally, but it is a really cool place. A lot of good memes as well. And, yeah, until next time, you have a good one. Peace. We're going down, down in an earlier round. Sugar, we're going down, swinging. Be another round, I'm gonna be closing my puts at 385, going down, down. Have a good night. Hopefully I don't get burned. I mean, dude, I don't know. I mean, what would happen? You just pop up here, I guess. You know, something really, I don't know, something really bullish, or you just kind of like fade it out going into tomorrow. I just don't really see that happening. I mean, like you just kind of do this. I don't really see that happening. That's kind of weird. The apex, the magnet, right? All right. Have a good night.